Hello everyone, Justin with Deep Dive Stocks here, and today we're going to be looking at Composite Charts. It's a relatively, probably the newest feature in Deep Dive Stocks repertoire, but I've been enjoying them immensely, and I want to share them with you. I think they're very powerful. As far as I know, you really can't get these types of charts with any other tool besides LDPS and LDPM. Namely, I guess there's a few reasons perhaps, but I think the main one is just simply because we're directly measuring liquidity, and so we can then compare liquidity between two different things, three different things, five different things. And when we do so, it looks like there's some magic that happens, and I'm going to share that with you. So today we're going to be looking at the composite charts, and the goal is just to look at what are they, how do we make them, and why do we make them? I think the why will be pretty evident as we go through the first two, but I definitely have some examples prepared just to showcase the variety of composite charts that you can make. So let's get started. So what is a composite chart? Well, I guess as the name implies, or I don't know if there is another name for these types of charts, so if you do know of one, definitely put it in the comments below or reach out to me. But I've just been calling them composite charts. And the idea is that we are comparing two things. So here we're comparing SPY versus Tesla. And we do that by, in TradingView, and in general, it seems, by typing in essentially SPY divided by Tesla. And this gives us this composite view. So we are now getting the relative liquidity between these two symbols. And we can then, if we get crafty with which symbols we compare, we can get pretty creative. We can also do adding. So if we wanted to see what the liquidity together was, we would just do SPY plus Tesla. And we'll see an example of that in a few minutes. You can also even do multiplication with it if you want. So SPY Tesla. And that would give you the product of the liquidity between the two. And the result, real quick, so that's the what, I guess. It's essentially we're comparing, I guess, one or many, but in this case, two symbols against each other. And the idea is that we can combine the liquidity and get a combined view. So there's the what. Essentially, it's just applying LDPM and LDPS onto a multi-symbol chart. How we do this, other than typing the names in, is actually pretty straightforward, and it's really just that. So how we do it is we just add SPY and Tesla into the symbol search, in this case, right? But it could be whichever symbols you're using. And the only difference that I do with these charts versus how I use LDPM and LDPS in general is, one, I don't really use LDPM. This is mainly a liquidity status type view, and LDPM doesn't really help with that because we want these nice bullish and bearish blocks. We want to know when one is going to outperform the other, and we'll get to that in a second, how we know which is which. But in terms of the settings, I will typically use a higher sensitivity mode, so a more conservative one. The default is balanced. And really, since this view is designed to give a kind of sturdy relationship between two symbols, I find that I just look for which is the least conservative that gets us to times when you don't get these breakout moments. So we see a little bit of bullish liquidity here. We see a little bit of here. But when we switch to diamond, we see that we have some pretty nice consistency, right? Like I want that when things change, it's going to be a full trend change. And so that's the one thing. I put the sensitivity mode. I tend to look for the, I move up the conservative ladder to look for where I get these nice chunks of change. Another change that I do is I switch LDPS detail amount to simplified, because again, this isn't really to dig into the details of what's going on with these symbols and their liquidity. For that, I would just go to the regular chart and put LDPS and LDPM on. But rather, we're just simply looking for what is going to outperform the other. And so I don't really need all the detail here. I just want bullish or bearish, and that's what the simplified gives us. In the same measure, I disable LDPS measurements, mainly because, again, I just need the colors. I need to know if it's green, or in this case, it's bluish green, or red. Those are the two things I need to know. Another thing that I do is I add the secondary panel down here, and that has the two symbols that are being compared, so that we can visualize directly how price changed in these two different periods, when LDPS is printing bullish prints and when LDPS is printing bearish prints. So for instance, in this instance, if we see that mainly turned here, here, and here, we can see that there was distinct differences in how these prices behaved. So that is the, I'm just going to back up real quick, just as a quick recap, how mainly just adding the symbols, no LDPM, LDPS, I tend to go conservative, make sure that text is good, and then disable, disable text, and get this unsimplified, and then I add the bottom panel to keep track of the actual price changes. And then I guess the next step is, how do we interpret? And we kind of briefly went over, but how interpret. And the idea is, if we have, in this case, we have SPY over Tesla, then just like if we consider, I don't want to say like if we consider fractions, but it works exactly the same as a fraction would, right? So if SPY is going to outperform Tesla, then this fraction with SPY over Tesla, if SPY is going to do more than Tesla, if it's going to appreciate more, then this value increases. And so we get bullish liquidity. And conversely, if Tesla is going to go better and is going to do better than SPY, then we get that bearish liquidity. So in a nutshell, bullish means the top symbol is going to outperform, and bearish is that bottom symbol will outperform. So that's kind of why I just use the simplified mode, because it's really just a matter of looking to see who's going to outperform who, and then finding creative and insightful pairings for that data view. So that's the how. We add the symbol to the chart, make things a little bit more simple because we're not looking into the exact details of the liquidity here. We're just looking at the relative performance between two symbols, or 3 or 4 or 5. And then we just go by the colors. If they're green, the top symbol or symbols should outperform. And if it's bearish, then the bottom symbol should outperform. So pretty nifty, right? So the last question is, well, okay, cool, but why? You know, I'm sure you have a lot to do. So why would we do this? Well, if we look real quick, this is SPY over Tesla. So we're looking at the relative performance of SPY versus Tesla. Let's just map out this group. So on 2024, June 13th, conditions became bearish and they lasted, let's see, and this is the daily chart. You can do them on any time frame you like, but I want date range. So how long is this? So this is 239 days. And because it's bearish, we know that Tesla is expected to outperform. And if we go and check on prices, and this is why I love having that price on the bottom panel, we go up here. Or I might not be able to be, can you not? There you go. Let me move me. Oops. Get in the corner. All right, there we go. So we do, so I go from the, when it switched, the price, up to when it ended, and we get a 100, when we do this, we get a 102% move for Tesla. And obviously it's going to be hard to do SPY, but we can see in that same time frame, it definitely does not move 102%, it moves 8%, slightly less, right? And that's the name of the game. During this period, we would be confident that Tesla is going to outperform SPY because it's bearish, and that means the bottom symbol is going to outperform, and that's exactly what it did. Then we see it switched to bullish. It looks like we're right about there, which was February 6th, 2025. And if we look to see how long this period lasted, about 210 days. So these are quite substantial. We can see here that we do get a little bit of these printouts, these bearish prints. But with 2020 hindsight, I marked it based off of when it starts going full. But, you know, let's be fair. I'm not going to do this. This would have probably broken my ankles, but... So in this case, it's bullish. So we know SPY is going to be, should be most performant. So if we start with the yellow line, we go up here, we see SPY move. Oops, that's still time. We move up and we see SPY moves 8% during this period. And Tesla moves negative 8%. So just about a balance, but we do see it gets a peak of negative 41%. So exactly as we expect, bullish liquidity favors SPY performance. And this highlights the one drawback though, is that it doesn't really give you directional output in that, you know, it's not going to tell you on the specific equity level how much either one's going to move. It's simply a relationship between the two that are being compared. So you can, you know, have it where maybe SPY moves 50% and Tesla moves 51%. That would still indicate that the data were showing a more bullish flow into Tesla than SPY, you know. So then if we move over here, we see we're still currently in this bearish stage. So that tells us that Tesla is expected to outperform the market. And so far, if we check, Tesla has moved 24%. And, you know, we could, for fun, but I know that SPY has not moved 24%, only 4%. So it seems since August 25th, 2025, this trend is still holding true. And we had a little bit of these, what do you call them, like little breakout prints. But so far, those don't seem to be popping up on the bullish side. So that is the why, because we can look for these types of behaviors, and do some pretty powerful stuff with them, honestly. You think, it's a very viable strategy to short one thing to long another. And this type of liquidity pairing is, I think, phenomenal for that, right? So now that we have a general understanding of the how, the who, the when, the whys, let's look at some more examples, right? So this was just an example to showcase two symbols being compared, right? We had an index and then one of its constituents. But we can also look for connections and correlations in the market that may be more hidden or maybe less in the zeitgeist of people's consciousness. For instance, if we look at Bitcoin, the composite chart for Bitcoin over VIX, the volatility product, we see that it lines up really nicely, such that when things are bearish, again, we expect the bottom symbol to outperform. And so in this case, that's volatility. And when it's bullish, we expect the top symbol to outperform. So in this case, that's Bitcoin. And one of the cool things to note here is that these bearish moments often precede these very large increases in volatility. And that's kind of why the sensitivity for these, I typically go higher, because I'm not necessarily interested in catching the early and the early entrance and early exits in this situation. I merely am looking for those heads up that something is going to change. There's going to be a moment change, right? And so if I see bearish liquidity on this composite chart, then I prepare for volatility, go long volatility. And I'm hoping that my trader brain will know, hey, volatility is just skyrocketed. So if we look at, for instance, here, so we go, right? So it's 112% on volatility. And here, that's 125% on volatility. I'm hoping that my trader brain will know when to, take some profits there. It looks like that's 139 days worth of performance, 100 days worth of performance, 111 days worth of performance. Are we overextended here? And we're at 127 days. So at least from this year, it looks like that we are a little overdue for a pop in volatility. And so that becomes the name of the game, essentially, right? Like we now just simply make this chart. I'll show you what I do. A little behind the scenes, right? So I make this composite chart. Can you see that I saved it? No, you can't see the name. But I save it as a chart, right? And then all I do is I do make an alert. LDPS has become bearish. And now, the moment that this switches to bearish, I'm gonna know, and that tells me to start preparing for a high likelihood of a VIX skyrocketing, right? And we can see that, I don't know, I'm just excited. I'm excited for this to happen. And that's it. We can make these composite charts, you analyze it, and then set the appropriate alerts and just kind of go from there. So in this case, we can see that we can compare kind of two very drastic portions of the market. We have cryptocurrency, and then we have a volatility index. And we can, because we're directly measuring liquidity, we can directly compare the two. We're comparing apples with apples. And when we do that, we see that a very nice correlation emerges. And I guess beta just falls all around whenever you have alpha, and that's what this is. And you can start, this is where creativity comes into play, because, this was a whim. I was just like, I wonder if Bitcoin is associated with volatility in any way. And so I made this chart, and voila, it looks like it is. And so now it's just a waiting game. We just have to wait for this to turn bearish. And you see, I hope this kind of highlights why, there's no real, at least as I see it, a real benefit to having it on, balanced and aggressive. Because you might catch these, small little volatility spikes But to me, this is, I want this tool in my head, it's something that is very like it triggers, and then I know what the future is going to be, even if it's you know, a little out in the future, and if I kind of maybe sometimes miss these, smaller volatility spikes, that's fine, because I don't want to be looking at the market all day. So again, just to highlight, and I think just to showcase the, how cool, but truly the benefit of LDPS and LDPM is, you can compare anything with anything as long as you can compute LDPS on it, because you're comparing apples with apples directly. So moving on to another example. In this chart, we have the Berkshire Hathaway portfolio has been recreated. So to do that, I just went to the Berkshire Hathaway website. They have the holdings along with the percentage in those holdings, and I typed them in. So we see that, let's see. So we have, for instance, Berkshire Hathaway has 22% of their portfolio is in Apple. So that becomes 0.22 times Apple. And then we add it to all of the other parts of that portfolio. So for instance here, they have 18% of AXP, and so it becomes 0.18 times AXP. And then you do that for all of the symbols and then and weigh them appropriately. I didn't do anything less than 1% just because TradingView was kind of getting a little annoyed. So it's like 3% and above, and they had some like 1% and then less than 1% holdings, but I'm not doing a PhD on Berkshire Hathaway. I just kind of want to know when things are weak, right? And the idea that I had was that Berkshire Hathaway has historically a very good portfolio that is driven on the value thesis, and so they to me represent, to use LDPM vernacular, the organics, right? Like they are truly interested in buying low and selling high, so they position themselves in the market to do that. And so I felt like it might be interesting just to have a peek at that portfolio to see if that portfolio is having weakness, because that might foretell significant weakness elsewhere. And it seems like this is true. We have these moments, these correlations. I already did. Where we see here, for instance, the liquid. So, good point. So, this isn't we're not dividing anything by anything, right? So this is just a sum of equity values. So it's like Apple plus AXP plus Oxy plus KHC, so on and so on and so on. So in this case, the bearish liquidity just means things are going to go down. This basket overall, and when you add up all the liquidity, it's bearish. So things are likely going to go down. And we see that that's predominantly true. And we see that things tend to go up when things are green and tend to go down when things are red. And I thought this was interesting when I put it together, because as of October 1st, that was Wednesday, we've started having bearish prints. So with this view, the Berkshire Hathaway portfolio is experiencing some bearish liquidity, which good for them, right? Because as value seekers, they're going to be interested in buying low and selling high. So this might be a upcoming good buy the dip moment for them. But I don't know. I thought that was an interesting, just kind of, I'm going to keep an eye on this view and see what happens. And so this is just another way you can use these composite charts. Essentially, you can create your own baskets or mimic some other baskets. So for instance, I was going to do ARK, and then I was going to do like the Nancy Pelosi basket, but you can really just create any baskets you want. Make your own portfolio's basket, whatever stocks that you have, right? Just figure out the relative weights, add them in, put them in here, And then bam, now you can have a customized view of liquidity for your exact holdings. Pretty nifty, huh? So another example. This one is quickly becoming my favorite. I've yet to honestly though, I've been tinkering with it, so truth be told, next week is going to be my first time trading with it and dipping my toes in it. But I've been watching it and watching this and figuring out kind of the best way to handle it. It's a bit more involved in the other composite charts, but I am excited for how the details look. So notice the other composite charts were predominantly on the daily, right? And again, because I was looking for these overarching behaviors and relationships. This chart is the 1 minute chart. And it's the 1 minute chart because this is comparing 0 DTE calls, or what will be 0 DTE options come Monday, the 6th of October. So it's comparing the 0 DTE calls against the 0 DTE puts. And I did have to use an external service. I had to dig into the database. Sounds official, but really I just had to I wanted to find options that were obviously 0 DTE, but also ones that were in the like 0.20 gamma range. And about 0.1-ish kind of gamma. And the idea is that I wanted options that would naturally increase in value as time passed, which you get with the high gamma and near term 0 DTEs. But I also wanted it to be a kind of underdog, if that makes sense. So like the 0.2 delta range. And the idea was that if you can get all of these, 0 DTEs and then create a relationship, would there be anything worth seeing? And it turns out the answer is yes. The answer is yes. We can see here. Oops. I always do this. Yes. So remember, these are 0 DTEs. And I have ES on the bottom here. And we can see, so red means, so in this case we have a nightmare. That's what we have. So in this case we have, okay, call option number 1 plus call option number, I think there's like 6 over put 1 plus put 6. Okay, so we're kind of combining what we were doing in the last two examples, where now we're adding up a whole bunch and then comparing it against another added up a whole bunch. So this basically becomes comparing 0 DTE calls against 0 DTE puts. And so, and everyone loves 0 DTs, and you can see here that this is a particularly nice view, I think. So, and I was looking in the past week for the actual sort of 0 DTEs. I didn't want to, for this chart and for showing it, I didn't want to like go back and use old 0 DTEs, namely because I didn't want, I don't want to make it look like the data was cherry picked. And I'm going to drop the symbol list down in the description, and you can go look at it yourself. But if you go and look even on your own, you'll see that it's really just the sum of the 0 DTE calls by the 0 DTE puts that have a delta range of 0.25 to 0.75. So it's those like 6 options. And so come Monday, I'm very excited. And again, this is the 1 minute, right? So this is designed to be very 0 DTE-ish, very in and out. And so we see that, for instance, things were bearish for an hour, almost 2 hours, and then things were bullish for about an hour and a half, and then things went bearish again. Because again, remember, if it's bearish, that means the puts are going to outperform, and so that means that the underlying is likely going to go down, which we see. And when it's bullish, that means the calls should outperform, which means that the equity should go up or / not go down, right? Because again, we don't get true directional insight, we just get relative directional insight. And then now that it's bearish here, we expect the underlying to go down or at least not go up. And it seems that things have already gone down. So come Monday morning, whatever it is when it opens, so what was it when it opened? Is this Friday? Oh yeah, no, yesterday was Friday. So we have Friday at 9:30. So let's, oh, you can't do replays on this actually. So Monday 9:30, we see first candle was bearish, and then at 9:31 switched to bullish. Things went up. We had a little bit of this breaking the legs. What is LDPS here? Conservative, does diamond? Because this is 0 DT, I want to conserve a little bit of early entrance, early exit. But diamond seems to be good too, so we're going to leave it on diamond actually. Right? And so the name of the game is just going to be, when it's printing bullish prints, 0 DT calls. And when it's printing bearish prints, 0 DT puts. We're just going to see how that goes. So that's that. That's that example. Another example is, this one I have a little annotated for us, Forex, so crypto pairs, or not crypto pairs, kind of messed this up. It's with when you have the relative scales there for percentage-based things like move everywhere all the time. So that's why I do these vertical lines, just so, because those will always stay the same, right? Like the price change between the 2 points. So that way when I move things around, you just have to worry about like if you can see the text or not. Okay. All right, so same story. In this case, we're comparing the euro, I don't know how people say this, the euro to USD, and we're comparing that to USD to the Japanese yen. So we're comparing, in a sense, euro to Japanese yen. And I think that's pretty cool. I have the numbers here for us so that we don't have to do it live. But we can see that same story. When it's bearish, we expect the USD yen to outperform the euro, and that's what happened here during this period. Let me see, make sure you can. So the Japanese yen during this period, which was how long? So again, this is the daily. So that was 117 days. So during this period, the yen did 7%, while the euro did -6%. Then we move over here, we see that liquidity switched to bullish about on January 28th, and it lasted for 160 days. And we see during that time, the Japanese yen did -6%, while the euro did 12%. Recent times, how long have we been at it? 86 days. So if any of the recent historical precedents is precedent, we still have about a month and some change of this bearish liquidity. And we can see in the meantime, well, come on, text. There we go. The euro has moved a staggering 0%, and the yen has moved 1%. Exactly what we would expect, the yen to outperform the euro. But again, notice you don't really get that true directional insight. You do get a little bit with the like actual price changes, the bars, but these composite charts aren't really designed to tell us how much something might move, right? So for that, I would probably go to the, for instance, the USD yen chart and put on LDPM and LDPS and look for the resistances, look for the supports, and then set my price targets accordingly for that. This view is strictly to tell us who's going to outperform who. And so, yeah, pretty cool. Lastly, another example I thought I might show you is commodity pairs. So in this case, we have gold versus platinum. And same thing, we have so since this line, how long was that? And you can see how long these durations are. And that's the power of LDPS for you. So this is 126 days that it was bullish. And during that time, because gold is on top and things are bullish, we had 25% growth for gold and only a 7% growth for platinum. Then we get to, it looks like, what's that? May 9th. And things turned bearish, and they stayed bearish for the next 82 days, during which period platinum rose 40%, while gold, limped along at 0%. Then we see things turned bullish about August 30th, I think. And that lasted for 65 days, during which time the bullish, so we expect gold to outperform, and it did by just about 1%. Platinum rose 16% and gold rose 17%. And you can see that the flat price indicates that the two are likely going to kind of be equal in their movements. But we don't know that per se right off the bat with this view because this isn't really designed to tell us. But as we see it going along, we can see that when this chart, the composite chart's price moves a lot, one of these is moving a lot. And if it's bullish or bearish, we probably can figure out which one is moving a lot. But what was interesting is, as I was making this yesterday actually, we see that the latest print is bearish. So now we expect another round of platinum outperforming gold. And for now, though, we don't know how much that outperformance is going to be, especially because this is the first candle. But that is definitely something to keep an eye out for. So yeah, those are the composite charts, and I hope you have enjoyed the video. I wanted to give a pretty good variety of ways that this could be used, both for more direct, straightforward ways, but just comparing two symbols against one another. Maybe if you know of some market relationship between two symbols. Like, for instance, someone asked me earlier about Bitcoin versus MSTR. That was a pretty cool chart. But you can also use these composite charts to find your own correlations in a very powerful way. And, for instance, SPY over bonds, or, you can do treasury notes over corporate yield bonds, or, you can kind of really get pretty wild with this, especially because if you're watching this video on the weekend, it's the weekend. You can also create some of your own baskets, and we saw this with the Berkshire Hathaway basket here. But again, you can make your own, you can mimic your own portfolio with this to see if it has structural weakness or structural strength. You can mimic baskets already established, so like ARK, Berkshire, the Senators, so on and so forth. You can do options, 0DTE options, which I'm very excited for. You can do Forex and resources, right? So it's, again, the benefit of having a, price agnostic, symbol agnostic, liquidity measuring tool is that you can kind of put whatever you want into the pot, and you're going to be able to compare the two, whatever you put into the pot, you're going to be able to compare. And so it really just becomes a matter of finding good recipes to put in the pot, because, something's coming out, and some relationships don't really show much. Like if you looked at like Tesla versus, I don't know, some super related equity, right, that has a lot of, natural baked in correlation, maybe you don't see much. But, you look at this Bitcoin over VIX, you look at ES futures over VIX, and then you really, really start seeing some cool stuff. So I just wanted to share these with you, and I highly recommend playing around with them yourself. And if you do, let me know. Let me know if you see anything interesting. I'll definitely be, tweeting about these more and more. And so, yeah, if you have any questions, reach out. If there's any comparisons you want to see, reach out, let me know, and we'll see if we can put it together. Otherwise, I'm going to let you guys go. Thank you for coming. Thank you for watching. and I'll see you guys next time. Adios.